Hey guys, Sean here, and we are going to dive straight into the big question every gold investor is asking himself. How much gold should I seriously own? Should I stack 10 ounces and be done with it? Or maybe 50 ounces is the bare minimum I need in today's world of money printing, right? Now, gold has been used as money for thousands of years, and people all over the world trust this beautiful yellow metal to store wealth. Especially today when central banks are printing money like crazy and everything's getting devalued, right? So the official inflation rate today in the US alone is above 5%, which is insane. That means if you have $10,000 today at a 5% inflation rate, your 10 grand will be worth less than $6,000. And this alone should be one of the core reasons why gold is so essential to every investor around the world. It doesn't matter if you're living in China, the United States, India, or Singapore. Your cash is losing value every single month, and in this video, I will be going through 3 scenarios to help you better decide how much gold you need to hold. Now, I truly believe that it is important for everyone to stash away some gold regardless of how much income you make, right? Gold is a powerful insurance asset that is truly decentralized from the financial system, which means it's even more private than Bitcoin itself. And since 2001, the price of gold has risen from $280 an ounce to over $1,800 today. And it's not really that gold has increased in price, it's that currencies have lost their value and demand is flowing into gold because people truly believe in it. Now, gold can't be printed from thin air, it has the perfect physical properties of being money, and most importantly, what's interesting is that central banks are continuously stockpiling gold while the US Fed is somehow just fiercely printing money just to reinflate the economy, right? And kind of more or less, the rest of the world knows the end game. Sooner or later, these excess dollars will cause the prices of everything to go up. And I believe that gold will not only match inflation, but exceed it. And that's why I believe we should all be our own bank in a way and start saving some gold for emergencies. Which brings us to the first scenario of how much gold you need to stack. Now, the first scenario is the all hell breaks loose scenario. It's basically when S hits the fan, right? And we all know what S stands for. So for this case, you want to make sure that you have physical gold with you, right? So this can come in a form of coins or bars. I prefer coins, and I highly recommend on 1 ounce coins due to the ability to easily barter with them, right? It kind of gives you the best gram for gram cost, and it's the perfect entry level gold that will always make sense. And in this scenario, right, we are kind of talking about a financial collapse when all currencies can't be trusted and we are nearing the brink or are at the brink of hyperinflation. So what you want here is for gold to get you through this period of crisis, and the amount to stack really depends on your lifestyle, right? I'm sure that you have heard of the term an emergency savings fund, and this is exactly what you are doing when you are buying gold. You want to ensure that you have enough gold to cover you and your cost of living for at least 6 months. So you gotta total up all of your expenses, including your home mortgage, the food, transportation, insurance, and utilities, just to name a few, right? And let's say the total cost of your lifestyle in this case is $3,500 a month, which, to be frank, is rather modest, and we have more or less stripped away much of the luxuries of life. So for 6 months of emergency savings at $3,500 a month, this means you will want to have at least $21,000 worth of physical gold within reach, right? And it could be in a safe in your home or a third-party vault somewhere that is accessible. And the reason why it has to be physical in this case is because you want your gold to be outside of the financial system and really hold no counterparty risk. And truth be told, that's the exact point of gold, right? It is private wealth that answers to no one. So what I have here is 12 ounces of gold, which is slightly more than $21,000, and this is what an emergency stack will look like, right? And if the modern world ends tomorrow, I can easily go off and sell off my gold for cash or trade it directly for the things I want. And the amazing thing is, as the years go by, as gold gains in value and the dollar loses its value, this stash will still help to cover my living expenses or your living expenses for 6 months, and it could even appreciate even more. So do take the time and really find out how much money you need to survive on per month and multiply it by 6 at least, and that's how much money you need when it comes to stacking gold as your emergency fund, right? And depending on your lifestyle, especially if you have a car or big family to take care of, this amount could really increase by quite a bit. So don't be shocked if you require 20 or even 30 ounces of gold as your safety net after your calculations are done. Alright, for scenario 2, this is my favorite scenario and is to always own gold as part of your investment portfolio. That means that as you invest more into assets like real estate, stocks, bonds, and even crypto, a portion of your cash should go into gold. So for example, most financial advice out there will recommend that you place anywhere from 5 to 10% of your portfolio into gold. And if we look at billionaire Ray Dalio's all-weather portfolio, right, one of the most robust portfolios in the world, he allocates around 7.5% into gold. While the world's most vocal gold bug, and we all know who that is, Peter Schiff, has been saying that gold should make up at least 10% of every investment portfolio. That means for every $1,000 you invest, around $100 should go into gold. And personally, I find that rather small, and I personally allocate between 15 to 20% of my investable money into gold, and mostly gold, right? You know, up to 20%, I do hold some silver as well. But the great thing about this approach is that you can continuously buy gold every month or so and really dollar cost average your position, right? This allows you to really smooth out your buying price so that you avoid paying too much when the price spikes. And trust me, right, when the price spikes, you'll feel like the whole world is ending and suddenly have an urge to buy more gold, right? It's just the way it is. It's a really funny emotional effect that gold will have on you. The higher the price, the more of this beautiful metal that you will want to own, right? So having gold as part of your portfolio really allows you to smooth out the overall performance of your investments, right? So for example, during times of crisis such as a pandemic, war, or financial collapse, a lot of people rush to gold and is traditionally seen as a safe haven asset. That means your gold will certainly appreciate more than the rest of your portfolio like stocks. And having some gold will allow you to quickly liquidate it for cash and buy stocks at a discount if the equity markets really slump, right? I have a video more on how to take advantage of a market crash with gold that you can check out over here. And that's truly the beauty of gold, right? It serves as a wealth preservation and a financial reserve you can use to take advantage of a situation because it is most likely not correlated with the rest of the financial system. Now, for the third scenario, this financial scenario is what I call the currency reset lottery. If you have been investing in gold for any time, you would know that the Fed is printing money to oblivion, and one day there could be a monetary reset and a gold standard could come back, right? That means all the dollars in the world, or maybe just a portion, will be accounted for by gold. And if this happens, it will cause the price of gold to inevitably skyrocket, right? You know, in fact, if we take all of the M2 money supply of just the United States alone, which is coming to $22 trillion soon, and we divide it by all of the above ground in the world, which is around 200,000 tons or 6.4 billion ounces, right? We get around $3,400, which is almost double today's gold price. And we're not even counting the rest of the world supply, money supply, debt, and other liabilities, right? And if we do that, the price of gold can easily skyrocket above $30,000 an ounce. And if you think that is impossible, guys, just remember that Bitcoin went from $1 to over $60,000 in just 10 years. Look it up. But just a dollar value is going to be quite hard for you to visualize, you know, when it is the time to get out, and more importantly, how much gold that you need. And this is where we need to value gold in terms of real assets, right? So according to the Federal Reserve, the median family home today costs around $400,000 across America, and shockingly enough in Singapore, it's also around there. That means today it will take you around 225 ounces of gold to buy a family house. And if we take a look at the historical real estate to gold ratio, we can see that there were 2 points in time when it took less than 150 ounces of gold to trade for a home. And if gold were to account for just the US money and revalue to $3,400, it will only take 116 ounces of gold to buy the house. And here's the exciting part that I'm sure many of us secretly fantasize about, right? If the Hail Mary scenario happens and the whole world flocks to gold and a global monetary reset happens, it might take less than 100 or even 50 ounces of gold to buy the same family home. So if you're truly banking on this currency reset, this lottery ticket scenario, you should have at least 50 to 100 ounces of gold, because if the world goes back to sound money and gold's at the backbone of this, you can buy a new home with just 50 gold coins. So depending on your goals, the amount of gold to stack will differ by quite a bit. I personally am a scenario number 2 kind of guy. I choose to have gold as part of my portfolio for the foreseeable future until we return to sound money. So I will continuously allocate some money into gold every single month or so, and if either the doomsday scenario or the currency reset happens, hey, I'll be partying up in my new home while the rest of the world burns. It is what it is. Now, before I end this video, I want to quickly touch on 3 things you must know when buying gold, especially when it comes to physical gold. Firstly, you want to buy only recognized bars and coins, and here are 3 of the world's most internationally recognized coins. We have the American Gold Eagle over here. We have the Australian Gold Kangaroo, beautiful coin, and the Canadian Gold Maple, another fabulous coin that every investor should really consider getting some if you're into gold, right? And this is the most important thing about physical gold. When it comes time to sell, you really want to make sure that you don't waste time trying to convince people whether it's authentic or not. And when you transact, when you buy and sell all these sovereign coins, you won't have that issue, right? And secondly, you want to get gold that's 1 ounce or bigger. So when you get a 1 ounce coin such as this kangaroo, you only pay a physical premium of around 3 to 5%. And it kind of gets lower as you move up to 50 gram bars, 100 gram bars, and even a kilo bar, right? And the physical premium, if you're unaware, is basically the cost of digging out gold from the ground and refining it into a coin or bar that you can hold, right? It's part of the game when you're buying physical gold. Sometimes you can get lucky and buy it off a dealer or a seller at a spot price, but I really wouldn't count on it, right? I can count the number of times I managed to buy gold at spot price on one hand. And finally, when you buy gold, you want to have diamond hands, guys. That means to hold strong and not panic sell gold when the price goes down. Now, the price of gold will be volatile. This is one thing I can promise you, one thing that I can guarantee you, right? It can move up 5% within a day, and within a month, you can easily see the price of gold go up or down 15 to even 20% easily, right? And you cannot really predict when its meteoric rise will happen. That's why you need to be sure of your game plan and stick to your scenario, right? Whether you are stacking for financial emergency or as part of your portfolio, you only want to sell when the time comes, or when there's a great opportunity to buy other assets at a steep discount. So till then, keep buying and stacking, guys. So there you have it, guys, the 3 scenarios to help you determine how much gold you should stack. Remember, gold is a fantastic asset to own, but you shouldn't put all your eggs into one basket. But in today's state of the world, where money is being disrespected and being printed non-stop, you kind of be insane not to have some gold. So let me know what you think. Are you stacking gold for emergency or as part of your portfolio? Are you hoarding gold for the lottery ticket scenario and looking to get rich from it, right? So leave a comment below and let's have a chat. And if you enjoyed today's video, be sure to smash the like button, subscribe for more gold and silver videos. Thank you guys for watching, and I'll see you soon.